Shalom, everybody. On this Wednesday, December 10th, 2025, and we finally made it to FOMC Day. Ooh, ooh. I think the important thing about today was that there was going to be no surprise if there was interest rate cut because it was like 90% priced in. But from what I could tell and from what I read and heard was the consensus view was that it was going to be what people were calling a hawkish cut, which means, yes, they were going to cut, but they were going to kind of warn that there weren't very many left, whatever. And from what I see, it was, so in other words, the bar was not that high for it to be an upside surprise, right? Because if they're looking for a cut, we know, but they were looking for a little bit more hawkishness, and we didn't really get that. I don't know that we had like a hugely dovish talk at Powell on everybody, but it was certainly not hawkish. So less hawkish than expected means not as much of a hawkish cut. So that's sort of an upside surprise, at least from the view of cutting rates. And the market went up after that. Look, the cut was here, and we fooled around like we always do on FOMC day, and then the settle was higher, quite a bit higher. And then after hours, we had some bad earnings from Oracle, so we've come down since then. Whoop-de-doodle. But in general, the market was higher. And if you look at some of these things, the Dow, very close to all-time highs here. Right, the S&P, very, very close to all-time highs. The NASDAQ, pretty darn close. And the Russell, I believe, was at all-time highs. I believe equal weight of the S&P is at all-time highs. So we can say whether it was hawkish or dovish or whatever, but clearly the action was that of dovishness, because we would expect the stock market to go up. Check. We would expect commodities like gold and silver to go up. Check. While I'm on that, talked about the relative positioning between silver and palladium, both kind of white metals, but where silver is showing on a relative basis shorts, palladium is showing on a relative basis longs, and look at what they've done. I mean, palladium is at the same place it was back in late October. Silver is not at the same place it was in late October. So just sort of a good example of a positive outcome to a relative positioning trade there. Copper higher, bonds higher. So again, all these things are sort of what you would expect. If you saw these moves and said, well, do you think the Fed was hawkish or dovish? You would certainly say dovish. You saw stocks higher. You saw bonds higher, which is what we saw, short end higher. Dollar weaker. Dollar was quite a bit weaker. And, as this new COT has come out, it's not new, but as we are now up to, as of today, the 11th of November, we see that there was quite a bit of short going on here in the pound at these levels, right kind of near lows. And same with the Swiss, which had a big day today too. So the market is saying whatever you want to say, but the market was saying it was more dovish than expected. And even if it's not, the market is saying it's going up. And I know I hope on this a lot, but if you are shorting the stock market, if you are shorting the risk markets here, you are fighting the Fed, which is a long-term no-no. You are fighting the tape, which is a long-term no-no. And you are fighting City Hall, meaning the administration that wants to pump, which is a no-no. And you're finding out why these things are no-nos, because if you keep doing this, you keep losing money. And we keep hearing that these same bears all over the internet, it was, we're in a bubble. NVIDIA is in a bubble. NVIDIA is in a bubble. The AI is in a bubble. MSTR is in a bubble. You know, and then that switched interest rates and inflation and tariffs, right? This was all the bear narrative all year. And the big one now that's made a huge comeback, which I did a video on a couple weeks ago, is the yen thing. The carry trade is going to blow everything up. That's the next big one. Well, the yen was up quite a bit today. It seemed to blow anything up. And all this is doing, all this bear porn is getting these people that create it the views that they want, because we know that bear porn creates more views. And it is getting people to not invest in what is one of the greatest bull markets we have ever seen, driven by, well, liquidity like we have never seen, and a technological revolution like we have never seen. And you're fighting all these things if you are shorting, and you are paying the price for doing so. So I would advise to stop doing so if that's what you're doing. You don't want to be long, okay. And you know what? Like I always say, even if you want to be bearish, okay, be bearish. Still lose money. And you're still fighting the Fed if you want to be bearish. You're still fighting City Hall. But stop fighting the tape at least. At least let the tape agree with you before you do it, right? We now have, we want to talk negative tape, we still have the fact that you can see we've been super long the NASDAQ here. That would be the place that I personally would be looking to short. And you could argue that we're still lower than Palantir earnings day. We're above NVIDIA earnings day, where it failed. But this would be the last bastion, okay? This high on NVIDIA earnings day, there is no reason whatsoever to be short anything. And let's keep in mind that while you could say, okay, they're crowded NASDAQ and you could be short on that news failure, you would also be, look how short they are Dow, you would also be long Dow against it. So you're not really going to be short the market here. You would be long Dow based on this and short NASDAQ, right? So, which to me means just be flat, which is coincidentally what I am. But you have to, I say it all the time, you have to stop fighting these things, and certainly, like I say, if you say, well, I'm not fighting it because I got short on the day that, it showed that they were super long NASDAQ and it failed on Palantir earnings. Okay. Then just get out if we go through Palantir earnings highs. That's what I'm trying to tell you. All right. And that's really it. That's really it. The bull market continues, and it's still continuing on what I have been saying is the most important thing, which is the liquidity thing. Got that news today, and the markets responded in kind. So that's what continues to go on. Until that stops going on, it's very, very tough to fight it in any place. Stocks, bonds, metals, or dollar. Hard to fight it anywhere. And not only is it hard to fight it, it's unprofitable to fight it. So just be careful out there trying to fight it, just make money, or at least don't lose money. That's the advice I can give today and every day. All right. Good news was that the CFTC, for some amazing reason, decided they are going to speed up catching up on the COT data. They're releasing 2 old reports a week till they caught up. Now they're actually releasing 3 old reports a week. They did one yesterday, they did one today, and they're going to do one Friday. So we're going to be all caught up in a few short weeks. By the end of the year, we're going to be all caught up, which is great. So I don't know. We had a lot of people, me, a partner, and other people on Crowd Market Report sending emails and just getting on these people at the CFTC. I don't know if that helped, but something helped because they did something. Now what we want to do is double up the amount of emails we sell them so that they can create a daily COT instead of a weekly one, which I'm sure they could do. They just put in an extra hour worth of work, and it probably wouldn't even take that long. But Anyway, that's next step, at least the first step. They're getting this stuff to us quicker. All right. So that's good news, which means we'll have a COT report call on Friday, but tomorrow's Thursday, so we will do another one of these tomorrow, and we'll see how things go. All right. So that's the thoughts today. I hope that helps in some way, shape, or form. Please like the video if you like it. Join us at marketreport.com or just join us on YouTube here. I forget what they call it, but you can join us there, which doesn't cost anything. And hope we're doing all right, and we'll talk again. We'll talk again tomorrow. Thank you for listening, and we'll talk to you soon. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right, and we hope to see you there. Thanks.